It's a pleasure to speak to all of you guys. How many of you guys are in banking here? Can show of hands. How many are in fintech or payments? And how many are just startup people? Other kind of startup people? Hey, what's going on? So I'm here to talk about fintech and banking and how they can help each other. Because I'm going to throw out a really scary number here. $4.7 trillion is what Goldman Sachs is estimating that the banking industry will be losing to fintech. $4.7 trillion. I mean, that is a huge amount of money. And so banks are thinking, are fintech's friends or fintech's enemies? They're thinking, are we going to get disrupted? Are we going to be here for the future? Fintechs are thinking, are we competing with banks or are we trying to partner up with banks? Are banks going to try to take away our lunch, or are we going to have a really good partner for the long run? And the answer really is, why does it have to be competition when both parties can work together to grow the market even larger? So $4.7 trillion does not have to be lost from banking to fintech startups. That in fact, the banking should be enjoying the rise of fintech as much as the fintech startups are. So as Arda said, I'm the co-founder of Parasut. We are a SaaS and fintech startup. What we do is we try to make a financial management software for SMEs in Turkey. Financial management meaning invoice management, expense management, reporting, collections. Because a lot of the SMEs in this market, and it is most of this market, 99% of SMEs, or 99% of Turkish companies are SMEs. And they're keeping all their financials in kalem defter or in Excel. And it's becoming very, very unmanageable. They're having a really hard time managing all their finances to be able to grow. So we think we can produce something that is much more efficient for 99% of the market, which makes up 80% of employment, which makes up 70% of GDP. Huge amount of the economy are SMEs that we think we can help. And I think fintech can especially play a role in this, because one of the major reasons, or let's say two of the major reasons why SMEs are growing not as fast as they should be in Turkey is one, the lack of adoption of technology, and two, lack of access to banking. Technology we can understand. So the perception, of course, is the Kobis in Turkey do not like technology. But let me tell you, I'm very surprised all the time, because I walk to these Kobis, I walk through Umraniye, I walk through Parpa, and guess what? Every one of them has a computer. Every one of them has a smartphone. They're not doing business there. They're not doing banking. They're not doing this or that. They're maybe looking at Facebook or watching YouTube. And when you ask them, would you like to use a software? Would you like to use technology to help your business? Sure. Well, why aren't you? Well, there are no software out there. There are no technologies out there that are helping them. And so this is where, as Parasut, we think about that. How can technology, fintech technology, help 99% of business in Turkey, which make up 80% employment, 70% of GDP. So we started a cloud application, which we believe, since it is in the cloud, it is easily accessible, it is affordable, and it is the perfect solution, the right solution for SMEs. We try to make it as usable as possible, as user-friendly as possible, because our philosophy is SMEs don't have time to train and to learn about the software. They should get started with the software right away. And of course, it's available everywhere. It's available on mobile, it's available on the web. And what we try to do is we try to capture all of the business transactions that are happening for an SME. There are transactions with their suppliers, with their customers, with the government, with banks. And we try to capture these transactions to make it a lot more usable for them, a lot faster for them, so they can cut invoices faster, they can receive invoices, they can make collections faster, they can track all their balances so they don't forget about their cash flow. They always know their cash flow, they always know what kind of financial situation they're in. So it's a very natural tie, of course. We're halfway in SaaS, halfway in FinTech, but it's a very natural tie to FinTech. And for the people in FinTech, you guys know the story. Why is FinTech have the potential to steal 4.7 trillion from the banking industry? Well, what happened is after 2008, after Bear Stearns and Lehman Brothers fell, there was a huge financial crisis all around the world, which meant that, one, the banks tightened up, they became very conservative, they stopped lending or servicing perhaps some segments of the market, they shored up their capital, they stopped doing business in a more, let's say, innovative way. And two, a lot of the money that was going to the banking sector then started flowing not to public markets, but private markets. And a lot of economic policy was concentrated on how do you stimulate the economy, not through the big companies, but through entrepreneurship and through startups. So then we had a boom of startups going from Silicon Valley to New York to London to Berlin and to Istanbul. A lot of startups came and they were thinking about this payment problem. They were thinking about the finance problem. They started building fintech companies. So London, New York are probably the fintech capitals of the world now, and a bit of Silicon Valley. And then I think the most important thing is, remember this is 2008, so iPhone was introduced, that people came across very usable apps, that Facebook is reaching its height now, that people start thinking, hey, as a consumer, I'm interacting with really great technology, very usable technology, very friendly technology that makes my life better. But as a business, why do I have to use antiquated technology? I want great technology as well that perhaps the banks are not delivering to me. So you have a fintech boom, you have the conservativeness of the banks, and you have consumer demand for such technologies leading up to leading up to all of the fintech activities. So if you look at investment around the world, fintech has been going crazy. Last year, there were over $12 billion invested in fintech. Fintech is blooming around everywhere. Everything that a bank traditionally did, fintech is now starting to do. So starting with Mint.com in 2006, doing personal finance management. It was later acquired by Intuit. It connected, I think, 17 million accounts within 2 years after launch. Venmo making payments. They moved, 1.3 billion transactions just last quarter. TransferWise making remittance payments across borders. They moved £500 each month now. Robinhood, which takes the idea of trading and then makes it zero trading, so everyone can be a trader now. $0 trading fee. Funding Circle in the UK, they do P2B lending for SMEs. They've made over 700 million pounds of loans so far. And Gusto, formerly Zen Payroll, is not strictly payments. This is actually doing HR, but of course involves payments. So fintech is everywhere. They're moving billions of dollars every year in payroll. So now we're talking about the disintermediation of banking. This is what the banks are scared about, that all the traditional banking functionalities, and we're talking about front office functionalities, the functions that a branch manager used to do, the functions that a branch used to do. Now all those functionalities are moving to fintech. Do you want a loan? You don't go to a bank anymore, you go to a P2P lending site. You want a mortgage? Go to a P2P mortgage place. You want to do trading? Open up that mobile app, Robinhood, and just click away, right? So now if all those relationships that traditionally was owned by banks are moving to fintech, what does that mean for the banks? So we really believe in this philosophy of partnerships. And I've talked about it multiple times at WebRosie, that the more partners we have, the bigger the ecosystem will grow, the better it is for everyone. And when it comes to banking, it's no different, because as a SaaS and fintech company, there are a lot of things we do that are let's say, the flip side of the coin for a bank. We do invoices, bank does payments for invoices. We do expense management, people use credit cards to purchase those expenses. we do the reports to be able to see the cash flow of which the cash is parked at a bank. So we believe that if we teamed up with banks, and we're starting to work with a couple of banks now, that we can actually build a very sticky application that is directly tied to the small business needs in terms of banking, that can help banks acquire and retain customers, that can increase all of the transactions. So every time you get an invoice, you can make a payment right from the app, right from our mobile app, that can help increase the number of transactions the bank has. And then maybe even more importantly, because banks don't really have the real data for SMEs, they're banking based off of traditional standardized applications. That based off of real cash flow data, real receivables and payables data, we can actually help banks better underwrite the appropriate loans at the right time for businesses. So I think that this is a very, very interesting fintech solution that could potentially partner up with a bank. And we're hoping to make an announcement sometime early next year about one of these joint solutions we're developing. So the question is, can banks and fintechs work together like this? So let me give you a couple of examples of what banking may look like or is starting to look like, of what fintech may look like or is starting to look like. So you guys know Stripe payments. What makes Stripe beautiful is that their API, their technology is very friendly for developers, that they have a platform of services. And when I talk about services, you want to do recurring payments, you want to do mobile card reader, you want to do inventory, you need Stripe to do this or that. Well, there is an app within the Stripe ecosystem for that. So when you think about using a payment solution, you automatically turn to Stripe because they're the most powerful. They're the most powerful because they build a technology platform that makes it very easy for developers to work with, that makes it very easy for small businesses just to pick the right app off of Stripe to be able to get their business going. Plaid, because banks were not focusing on technology, because banks were not focusing on API, because banks were not focusing on third-party ecosystem, Plaid went ahead and actually integrated multiple banks' web services in the US to create a unified, simple API for other applications to build on top of. They're charging by API calls. So why did banks allow this? Why did banks not build this API infrastructure in the first place? So can banks turn into something that is platform as a service like Heroku or infrastructure as a service as Amazon Web Services? And this is, I think, what banks are starting to think about. So when you look at the US market and the European market, and especially BBVA Santander over in Spain, they're talking about open banking. They're talking about how banks can build third-party ecosystems. They're talking about how banks can work with fintech companies such as yours to be able to work together to jointly create solutions that can service the customer better. Because the bank of the future is going to look like something like that. So here's a bank that's really interesting. It comes from Germany. It's Fidor Group. They have an API. They call themselves an API-first kind of bank. So I think the bank of the future is going to be something that is going to be a technology platform so that they can work with fintech companies. Because it's hard to predict where innovation is going to come from. It's hard to predict whether Parasut may be the app for SMEs of the future or some other app may be. So what banks can do is focus on their core, which is, of course, web, online banking, mobile banking, and the back office infrastructure of it, but then build a technology and distribution platform so that innovation from any of the startups out there can build on top of the bank so that the bank and the startup, the fintech company, can work together to increase their revenues to grab more customers. And then when you think about it, the customer journey, of course, because a lot of the banks are thinking about customer journey in terms of migration from branch to online to web, that this is an even newer customer journey, that once you're online, once you're digitized, once you have the mobile app, then how do you interact with all the other functionalities that can be provided through fintech? how do you then choose an app to be able to get a mortgage, to be able to do P2P lending, to be able to do trading, all of this stuff. So I think this is really, really interesting for banks and fintechs to think about. But of course, lots of challenges, because one, there's a huge technology investment that does need to be made perhaps by banks to actually build this platform, to actually build the API, to actually have the right servers to handle the call needs. That's an easy one to solve. Harder one is probably the partnership mindset, because I think a lot of banks think about going at it alone. They don't think enough about partnering up. And that's already starting to change, right? Because ING did a hackathon, Guarantee did a hackathon, that a lot of banks are talking about helping the fintech ecosystem, helping startups, having incubation centers. TEB is very active in this area as well. But probably the hardest part is regulatory challenges. And that's something where, if it's unclear, how can we lobby BDDK? How do we lobby the right people to be able to enable the next generation of innovation in banking and in fintech? So I think this is a really, really interesting time in finance. It's really interesting because banks are opening up to allow much more innovation in fintech. That fintech is developing and is starting to mature in certain ways, is starting to think about the customer relationship, and there's a lot of really good examples out there. And the next wave of this is when fintechs and banks work together to bring innovation to customers. Thanks so much, guys.